Hey everyone, welcome to another video. Today it is March 20th. It's Sunday here in San Diego. It's a beautiful day, and today we are going to spend some time breaking down the last week of price action. So the whole idea behind this is to give you tons of entry examples. I realize that there's a lot of people that trade different time frames and have different strategies. This video is going to be just an expanded version of what I offer in my Discord. By the way, it's free, so if you want to join, links in the description. A couple times a week, I basically do entry examples and end of the day markups because I don't trade every day, and so usually I'll trade 2 days a week or so, sometimes more, sometimes less, it depends. But the idea behind this is to show you that there is an opportunity every day or almost every day for you to get a very clean trade that might more than likely fit your rules. Now, the whole idea behind this is I'm not trying to cherry pick like amazing trades that are going to work, that are like, wow, you're going to be impressed and think, wow, would you actually take that trade? No, I'm going to be very honest about this, and the reality is there's going to be some trades that I would not have taken. I'm going to tell you which ones. There's some trades that I would tell you they're probably too aggressive for my strategy, and I simply would have not taken any of those. There's some that I probably would not have foreseen, and I'll tell you if that happens too, right? So the whole idea behind this is I'm only going to give you examples that happen during the two main sessions. So if something happens in the first 3 hours of the London session, like during the London session trading period for me is 3 hours, which would be I think the equivalent of 7 to 10 a.m. GMT, right? In my time zone, time changed recently, so it's like now it's my time midnight to 3 a.m. So that kind of sucks, but I'm going to show you trades that present themselves during London session and during New York session. If they are outside of those sessions, the reality is I wouldn't be at the computer and maybe you wouldn't either. And so unlikely that maybe either of us would have taken some of those trades. So we're going to be pretty strict about that. If it doesn't come in during our time zone, we're not taking it. The other thing is we're going to go over different execution time frames. So a lot of people trade off of the 4 hour. I'm going to show you entries off of the 4 hour. And we're going to go over risk entries, maybe some confirmation entries. It really depends on the time frame you're trading if you can even get some of those, right? So execution time frame, we're going to do 4 hour entries. We're not going down lower than that for the 4 hour. I'm going to show you 15-minute time frame execution. We're not going lower than that to show you a 15-minute, meaning there's no lower time frame confirmation. It's just 15-minute. Then I'm going to show you if we refine 15-minute POIs to the 5-minute, how we can get a more refined entry from a 15-minute using the 5-minute. And I'm going to throw in a couple 1-minute entries that are refined from 15-minute zones. So there's going to be a couple of those. You'll find that almost every day there's a trade, and more than anything, this is to kind of show you there's going to be a ton of notes on this chart, ton of things that are my thoughts, what I'm looking for, what I'm noticing, because at the end of the day, I really want you to learn off of this video, and we're both learning together at the same time, right? So let's get better together. So if you want to watch this video, I recommend that you watch it all the way through. Maybe 1 or 2 times will really help you. If you want to see more stuff like this, it's in my Discord, which is free. Once again, link in the description. Let's get into it, right? So here you can see that we've basically framed out 3 weeks of time frame, right? So here we have, this was the most recent week from last Sunday to Friday, and then this was the week prior to this last week, right? Now this week is starting, today's Sunday, so we're starting a new week, right? But the market hasn't opened, so this is about 5 days of price action or so, or 6 days, however, it depends on where your time zone is, right? This was the week prior, and then this was the week further than that, right? So the idea behind this is a lot of people are going to look at the charts, and I'm very much about higher time frame narrative. It's very easy to start thinking and drawing all of your markups like on all these POIs all the way up here and even lower. I mean, if we're looking at the weekly, we have a lot of areas that we're reacting to currently, but most of the time what you'll find is that the previous week time frame, or the previous, let's say, previous like week, will leave behind a lot of fresh POIs that will give us mitigations during that current week. And so you really don't need all this amount of data. I mean, usually, we have a high and a low, and we're somewhere in between of that swing most of the time. unless we're pushing new territory, then it's like, okay, we really do need to look more to the left. But, in this case, you can see that price was mostly trading in the middle here. We had this low, we have a high all the way up here, we have multiple zones that we could look for, and price is just basically playing within this territory. And so we can very much expect that we are going to have reactions to recent POIs in the last 1 week or 2 weeks, depending on where we are, right? So this is just to show you that, right? So if we're going to focus on this, obviously this is in hindsight, right? I'm going to show you some trades that I did take, some trades that I didn't take. As I said, I don't trade every day, so this is just going to be me breaking it down fresh, right? So here we are. Let's get into it. So first things first, here we can see that this was one big push to the downside. This was about 3-4 weeks ago. We had this wick. Basically, this created a low. So I was waiting for when I get a break of structure to the downside that gave me basically candle body closure below this. This is when I got that. And so the way that I'm seeing that is basically this POI here, which swept liquidity to the left, looks like a liquidity POI, as we can call it, right? Takes liquidity, breaks structure to the downside. You can see here, what do we have? We push the downside, we violate the wick, basically sweep the sweep, right? And then we push back up, have a little pause where we're building more, basically more orders, and then that's when we get our break of structure to the downside. Here you can see that we have a pretty aggressive doji, probably some sort of reaction to news. We sweep the highs, we sweep some lows, but create equal lows here, right? And then what do we have? Basically anything in between these is basically an internal range, right? So anything in here, what we're really looking for is POIs that get engulfed. And so the first one that is the highest up here, the way that I see it is, basically if we're going to push to the downside, this took liquidity, so I'd like to see this one mitigated. Sorry, 1 second. I think I'm going to increase the size of this because I have had some complaints about the crosshairs not being visible. So here we are, we're fixing it. Okay, so basically what this did was it mitigated this POI. We only have somewhat left mitigated up here, but we did mitigate 50% or more. And then this is when we had the first engulfing, right? So you can see that this candle body closure closed below the low wick. So this was an engulfing to the downside. So for me, this one's the one that I'm looking at, buy to sell engulfing. Here we do pause, but what do we not have? A mitigation of 50% of this POI at this area, right? So we continue to push. Here, another engulfing to the downside. Here, what do we have? This doji sweeps some lows, comes back to mitigate POI to the left here, and then engulfing to the downside again. This one's somewhat unmitigated, but more than anything, this is where we had the first engulfing to the downside. So for me, this is the 4-hour POI. This is the 4-hour POI I'm looking at. Price pushes down. We have this push, very aggressive impulse push to the downside. Here we have a small little pullback, doji for 4 hours, where we're creating some indecision. Buy to sell, engulfing, break structure, downside, new low. So technically, this is my 4-hour high, right? 4-hour low. When this gets taken, I basically have a 4-hour change of character. Let me see if I have any notes on the higher time frame. Yes, I have a couple here. These would be entries. Okay. So anyways, what do I have here? This is basically 4-hour change of character. So basically this push basically created a break and closure above. Now if I'm looking at this closely, I can see that we have this very aggressive wick that's even larger than the candle body here with this part up here. And so basically what I'm seeing is this probably opened and we probably had an aggressive push to the downside that created some sort of tap of resting orders that created this aggressive push to the upside, and then it got engulfed, right? But the reality is, it looks like it got engulfed, but this is the candle wick low, and so while the body itself was engulfed, basically what we did is we obviously tapped some resting liquidity here that pushed price higher. Price came back to give us a mitigation, and so from this high to this low, basically this was the lowest point, and at this point this is where we're building some liquidity in here, some momentum, some volume to take price higher. And so the way that I see it is from this low to this high is a 4-hour swing. Here this was basically the last sell candle before we had this buy price action, but in here is where we were basically building momentum. And so the way that I see it is that we have a 4-hour change of character. We're pretty low on the leg. I could see price come up higher to tap this POI, considering this is has a lot of imbalance here. This one took liquidity. There's a lot of noise here. I'm thinking, in my opinion, that likely this could provide some inducement or some liquidity to be taken if we tap this POI. So the way I see it is, if I'm trading the 4-hour, once we have this swing up here, what do we have? We pull back. So I'm thinking, okay, demand is still in control. We have not yet tapped supply. Price is then retracing. Here we have a pause, and here we have a very aggressive sweep, and that sweep creates another liquidity POI, right? And so what do we have now? We have official tap of 4-hour supply. And so supply is technically in control. A lot of times if supply is in control, I don't want to set a limit on a 4-hour demand. Because supply could overrun that, considering we are bearish. But at the same time, without looking what we tapped on the left, which is a weekly or daily POI, right? Only thinking about this range. What I can also see behind this is that, well, we did get a 4-hour change of character, and this was a very aggressive move to the upside, very aggressive push. So considering this push was very aggressive to the upside, right? What I'm expecting is likely that this tap of supply needed to tap the resting orders in order to get price to come back to a proper place to take buys from. Now, if I'm going to take a buy on here, it's going to have to be a risk entry, right? Because, double confirmation on the 4-hour could take a long time and I might not get that, right? So in this case, why would I pick this POI instead of this one? Well, while the doji candle does get engulfed in itself, what we do see is that this candle here basically is what tapped something to the left as it came lower than the sell candle. And so to me, this must have tapped something to the left to trigger some of those orders. And that's what has pushed price back up. Now, obviously we decided to make commitment to the upside here, but this somewhat mitigated something to the left, which is probably less than 50% or more than the 50% mark of this wick here. And so to me, this is the POI I'm going to set. And to me, it just seems a little bit safer than to have this POI here. If I would get tapped, I would take it. If I don't get tapped, I wouldn't take it, right? So I'd set a limit. This is what the limit would look like, right? So this is the 4-hour. This would be from this POI here. We'd cover the low, just the low. And then what would I be targeting? Well, considering that this is a 4-hour POI, so 4-hour demand that gave us a 4-hour change of character, we've tapped 4-hour supply. 4-hour supply is engulfing in its nature and very aggressive to the downside. But I think mostly because we don't have enough buy orders, because most of them are resting below here. So my thought process is a 4-hour POI, right? And now we have two, right? The 4-hour, which is this massive wick, and then we have the refined one, which is this 4-hour that created this leg to the upside, right? So I'm taking it off of this 4-hour, and I'm targeting this 4-hour, because my expectation is if this was not strong enough to take out this level, then this level will need to take out this initial reaction and should come up higher. And so what I'm going to target is just the high of the reaction. And so this would be my entry. And this would be a 4-hour, right? So here on the 4-hour, this would have been, it did tap into it. It was in here for a while. Now, this is where we get the new week, right? So this is the week beyond. So we would have still been able to get that entry after Sunday and been able to get on this probably during Monday or Sunday market open. We would hear for about 8 hours before price took just during the fresh week. So we would have been able to get that anyway, right? So this is what that trade would have looked like. So this trade would have been 8.4 or so. That's with a 24 pip stop loss. It's not bad. 4-hour demand targets 4-hour supply high because this is considered weak, right? Now, as we push to the downside, let me show you the actual ones here. I have some more notes here. I'm going to go over this second example, and then I'm going to show you the specific notes that I took on that entry. Next thing, what do we have here? Well, we can see that this area is another liquidity POI, just like this one, looks very similar in its nature, and is engulfing to the downside. This area specifically causes the tap of this POI, right? And so because the expectation is if this holds, this one should go, I would expect this one to also go. Now, technically, this one isn't strong as it hasn't broken 4-hour demand. And so when I can see price come up, what I'm looking for is some sort of reaction to the 4-hour. Now, I could have, for example, use this entire candle body and the wick as the 4-hour, but simply that POI would be way too large. And so in this case, I feel confident enough just considering the 4-hour, considering that even the 50% of this, which would be right here, is where we swept this previous one. This is basically the 50% of this wick anyway. And so this is pretty close. So I could see price coming back into here to sweep into this portion of the 4-hour. So price comes in, we have this low, pushes up, taps into the 4-hour supply. We get a reaction, we sweep liquidity. This gives us what? A sweep and mitigation of a strong demand, right? Oh, sorry, that's this point. So we're not there yet. This one sweeps to the left and takes out the reaction to supply. So once we get this sweep, what do we have? We do not come back to tap the 4-hour here, but we kind of tap a new POI here on the 4-hour, right? But because we swept, and you can see that this pushed very aggressively to the upside, what did we take out? The initial reaction to supply. Now this is a pretty healthy reaction considering this is above like around the 50% area. So it's not just a tap at the low side of this POI, it's much further deeper into this POI. So likely the only area that we could come back into would be above this POI, which is in this area that has yet to be mitigated. And so if this reaction takes out this first point of reaction to supply, then what I'm expecting is this is going to be where there's a lot of unmitigated resting buy orders, considering we swept and we stacked enough buy orders to push to take out this first reaction. Here you can see that with some aggression, at this point, what do we have? We come in and we tap much higher on this POI, we form this new candle, and what's going to happen is, because this is a sweep that took out this initial reaction, I'm considering this strong. And so this would be another place where I could set an entry. Now, what would that entry look like? Just like this. I would set it just at the high of that candle and just at the low, targeting my stop loss would be just at the low or slightly below, accounting for spread. And what am I targeting? This would be a secondary entry for me, targeting this initial reaction. And so here we have for that week an 8.3 or so and a 5.58, right? So that's pretty good. That's a little bit more than 13R, just trading the 4-hour. And these would be two simple entries that we could have got. Now, you know, if I'm looking now on the notes that I have here that I've expanded, we can kind of go a little bit more on a recap for the 4-hour. So on this 4-hour, what do we have? The first thing is we have a bullish change of character. So because this high broke structure to the downside, this is considered a strong high. This is a 4-hour high. So if this gets taken out, even by a wick, that's enough. Now, because we get candle body closure above on the 4-hour, it's a 4-hour bullish change of character and a break of structure. So that's a lot stronger to me. Now, what area caused that? Something in this wick basically is what ended up pushing price higher to breach this. And so I'm focusing on this wick, right? Now at this point, I'm not exactly taking an entry off of this because this is previous, that's of last week. We're only focusing past this line and beyond, right? So when I see this new swing, I'm thinking, okay, this is the new 4-hour demand that's strong. This one came in to mitigate this wick, right? And then we created a new swing to the upside, right? Up here, I can see number 3, note 3 is 4-hour supply is in control and it's being respected, right? So now supply is in control, but this swing, very aggressive, lots of imbalance, and this looks like the origin of the move that broke structure again to the upside as we took this high, right? And so I could very much see price coming back to mitigate this. And for me, I'm going to refine down to this POI. To me, this one seems a little bit more high quality, as this one is deeper in, came in for that deep mitigation. I set a limit on this one, 24 pip stop loss. Price comes in, and setting a risk entry on the 4-hour bullish chalk. If this 4-hour demand holds, we should target 4-hour supply as it would be weak, right? We already know that. This one sweeps to the left, takes out the reaction to supply, shows strength. Okay, perfect. Here we have prices pushing back up. What do we have? This one's a sweep, right? 4-hour liquidity POI that swept and took out the first reaction to supply, This is the first reaction to supply. This is when we take it out. And then what do we have? We kind of sweep the high a little bit. We come back, we mitigate this. This is a pretty good place to get an entry off of. This is a sweep and mitigation of strong demand. And then we get what? A break of strong, what do we have? Sorry, break of strong supply. A break of supply, which is this one. And then that's how we get these two entries, right? So that makes sense for the 4 hour. So now what we're going to do is we're going to go down to the 15 minute. The 15 minute is going to be a little crazy. I'm excited about this one. So let's see what this one looks like. We're going to do our best here. All right. So here we have, let's zoom in. We're going to need to zoom in a lot here because there's so much stuff that we're going to be looking at. And this is the 5 minute, and then that's the other one. Okay. What do I need to get rid of? Do I need this? I don't need that. Do I need 4 hour notes? 4 hour POIs somewhat will help. So, okay, so if we're looking basically at on this is the first day of the week, first trading day of the week. What do we have? So basically what we have is to the swing to the left, right? So here we have, this is a buy to sell engulfing wicks. Now, why would we not take the entire sell candle before? So you can look at it a couple of different ways, and it depends on the time frame. Obviously, if we're refining to a lower time frame, it's going to be much more clear. But what we really want to look for is the sell to buy price action or the buy to sell price action. The entire candle is great, and it's going to work in many cases. But what we're really focused on is sometimes the areas that get engulfed in itself. And sometimes those are the wicks in between those big candles. And so when that happens, we're going to really focus on those. Now, let's look at this one. Here we can see that what we have is buying. We tap this point here. We open a new candle, and then this is where we sell. And this is where we get what? A break of structure. So we have a candle body closure below the wick low here of this candle. So basically this is where we break to the downside. And the way that I see that is that this is the area where we really created commitment to the downside. So this is the first POI that I'm framing out there. Now we have a couple that we could be looking for. Let's see. But more than anything, what we're focusing on is, because this is a 4 hour supply, we've refined a 4 hour supply into this 15 minute supply, right? Now here, what do we have? 4 hour demand, that's to the left, right? As you know, that's focused off of this area here, right? And so here's what we're looking at. So price was bearish, came into this 4 hour demand. So what are we looking for? Price makes this low. You can see that we push up to here. We make this high. This high breaks to the downside. But what do we have? We have a sweep of the low. This sweep of the low is showing that we've swept this previous low that pushed to make this high, right? And this is telling us what? Well, first of all, we must have tapped something to the left that's, you know, lower time frame mitigation, but we've created a liquidation. We'd like to see what the reaction to this is. Are we going to drop further and break this 4 hour demand, or are we going to hold it and then push back to supply, right? And so technically here we have some buy to sell wicks. You could, for example, focus and copy this entire candle body, but what do we look at? The previous wicks to the left here have this low. And so when price comes down, taps this low, makes equal lows here, we have buying to selling, buy to sell engulfing, right? Wicks. So here we push, we create that sweep, price comes down further to mitigate this sweep, we mitigate that sweep. Price here, what do we have? Here we have inside of a 4 hour demand, we have a 15 minute engulfing candle to the upside. So we engulf the sell candle. So this is already showing us, okay, maybe we could be holding. We could also come back to tap something in here, right? But this is pretty aggressive. So we have buying that's leaving behind some imbalance. Price creates a pause. We create a little range in here. Price gives us what? A sell here. We're pausing here, and then we push to the upside. We tap into what? We tap into this buy to sell wicks. At this point, we could say, okay, this could be a little bit aggressive, but what do we have? We basically have a sell to buy that's engulfing. It tapped this POI. Now, what we could do in this case is do two things. We could either be pretty aggressive and take a entry off of this, the equilibrium of this, or we could wait for this to happen. Had we waited for this entry, we would not have been able to actually get a trade off of this. Now, this did get engulfed, did leave some imbalance behind, right? But considering the fact that we created a range here, we swept some liquidity to the left. Here you can see that we probably mitigated something in here on a lower time frame, but because these sell to buys, you can see some engulfing nature in here. The buy side, you can see this some imbalance that we've left behind here. Price taps. The expectation is what? We could be aggressive. Either this range could hold, or we could break this range and use this as liquidity to take this one. In this case, we can be aggressive. Aggressive entry, because why? Well, the 4-hour demand is respected. If the 4-hour demand is actually going to be respected, this should hold. If not, the demand lower will be the one that's mitigated. So in this case, we could set an entry at the 50% of this. Once we saw this very aggressive candle to the upside, we could expect price to come back into this. And if this range is going to hold, then we can expect higher pricing, right? In this case, 4-hour demand will need to test 4-hour supply. A 15-minute entry can target the 4-hour supply open, or we can refine a 15-minute supply inside the 4-hour. So we took this entry, 50%, about 4.7 pip stops. Let's just say 5 pip stop loss, right? And what do we have? We have an immediate engulfing to the upside. You can see how aggressive this was coming out of a 4-hour POI. That's why we felt a little confident in this one. And what do we have? We have a 15-minute bullish change of character. Confirmation that we're going to be bullish. Just before that, we have this little sell candle, it looks like, as a reaction when we violate it. But then we come back, and then this is where we engulf it. You can see that this body closed above this wick and above this this high. So price comes up higher. Where are we targeting? If we look up, we could say that we are going to target, let's unlock this. We're going to target the 4-hour supply. That could be very conservative, and that will work. This would be an 18R trade that all happened during London. So if you see this small shaded color here, this is London, and the second one is New York. So this entire trade happened during London session, so that's why it makes sense, right? Now, if we traded to the 4-hour POI, that would be very conservative. That would be an 18R trade. Now, considering that we have this, buy to sell engulfing wicks that push to the downside, and this area did do something, we could see that this area in itself did not tap this POI here. And so we could use this as inducement. And so for me, I would feel comfortable targeting this area here. And that would turn this trade from 18R to 21R, 21.8R. So that could work. Now we're going to hold this trade. This is on the first day of London session. Now we go to New York open. So this is the New York window that I could be trading. What do I see? Price makes this high and we pull back. Basically, we push to the downside. Here you can see we react to something to the left. Here we have a buy to sell engulfing to the downside. So upon New York session, we have this buy to sell engulfing that pushes to the downside. Technically, we've created supply that's engulfing in its nature, right? And we have not yet tapped this POI here. You can see that this POI, and we could go ahead and just do this entire thing like this. This would be the entire wick. The other thing is we could kind of refine it a little bit without dropping time frames. How would I refine this? Let me show you. This could make sense. Technically, what's the area that's unmitigated here where we have somewhat of an imbalance? Technically, this area is where we had sell to the downside. We closed here, and so the concentration of orders is going to be between this open and the sell area of here. And then this is where we had an engulfing candle to the upside. Technically, this wick came down when we have this, we buy, right? We have selling, push, pressure, pushing back down, and we've somewhat mitigated this imbalance that we left behind. And then what do we have? That's enough to push price to the upside. Technically, the only area that has not been mitigated would be if we, for example, narrow from below this wick from here to here. And so we could see price come down lower to this. Now, the other thing is, okay, well, if we look at this on the 15-minute, we could also say price could potentially come back to this POI here. Now, if price comes down to this POI, well, we would be fine because we'll be protected. We're still in this trade, but we would be potentially losing some R. So in this case, we could say, well, maybe we'll take a hedge, or we could say, well, this 15-minute buy to sell engulfing is basically creating supply. Demand has not yet been tapped, so we could try to target what? The top of this POI or slightly below to the candle bodies, right? Because of this, what do we have? In New York, we have this opportunity, price comes up higher. What is our entry? Our entry can be on this entire order block. It's a very clean order block. So the high stop loss would just be right above the order block. What we could do is we could also expand this to include that little wick. If that makes us feel safer, it depends on your own rules. This one would hold. It's a 15-minute POI. And a conservative target would always be what? Targeting that 15-minute break. So at the minimum, what we would be targeting is this low that created this pullback. Because the expectation is if this pullback basically doesn't have enough momentum and volume to violate this one, then this one should be taken out, whether it's broken or swept or whatever, right? If we did take that, that would be about 4.3 R during New York, just on the 15-minute. If we try to refine lower, just to see if we can get the price to come in to mitigate a little bit deeper in here, that would be about 5 R. And that's potential. So that would be a 5 R 15-minute POI during New York. You're going to see in this video that we have tons of examples like this, that in New York, when we get some sort of buy to sell engulfing or sell to buy engulfing that breaks some structure or something, then you're going to see that that creates a wonderful opportunity. In this case, this basically was a flip, right? If I go ahead and just mark this one out, right? Price came back into this demand. You can see we created a little sweep of liquidity, and then we were engulfing to the downside. So this basically was just a flip entry, right? Then what do we have? Price pulls back, creates this sweep, right? This sweep is showing what? Well, if we create the sweep and then we push to the upside, this tells me that we've tapped enough resting orders here and we do not need to come lower, right? And so therefore this entry would hold. Now, would we have taken a buy off of this? We absolutely could have, but considering that we have some imbalance down here, there's not necessarily a guarantee that this POI would have held. I would not have taken this trade, even though it does make sense in some ways. Would I have taken a long off of here? Probably not. So I'm not going to include a long off of this, because to me, I would not have taken this. It wasn't as clean for that, but I would take it as a take profit, right? Now, what do we have? We push price back to the upside here. We make this low, and then this low pushes and makes what? A 15-minute break of structure. So what do we have? If we take this note, we've currently at this moment failed to tap the 4-hour supply. So this is 4-hour supply. It's this lighter red version, and this is the 15-minute refined of the 4-hour. So at this price, we come back up here, and you can see that we're already pulling back down. But at this point, what have we done? We formed a 15-minute high. So break of structure, candle body closure, we have a new 15-minute high. The expectation is what? That the lowest point on this pullback, which is here, that caused the sweep, is going to hold. That's the expectation. And so this is the 15-minute low, 15-minute high. This is where we had a sweep that pushed price higher into this POI. And therefore, for me, if this low goes, which it does, this is during Asian session, we have what? A 15-minute bearish change of character, right? Now, this is all during the time when we're not trading, right? Because this is during like Asian session and, off-market hours, other hours that are not during prime London and prime New York. So we're not taking trades here. Price is pushing lower. And what do we have here? Price kind of comes in, taps to the left, and then what? Sweeps and taps deeper into this POI. Here you can see that we've actually tapped into the body now at this point, right? And so what do we have? At this point, we could think, okay, if we've swept liquidity and we've tapped into this POI, if we get a change of character to the upside as a result of that, then what are we going to think? We're going to think that likely we could come back to mitigate this area, and likely we're going to continue higher, right? This wick through is enough to give me what? It's we've already had this bearish change of character, but in order to take out, to get me a bullish change of character, what do we see? We have to see a high that makes a low get taken out. In this case, price pulls back up, still within the range of this pretty big candle that swept. And then what do we have? We have price action, pushing price lower. And what do? We basically tap relatively equal lows with this POI. So we've come into a very deep mitigation. At this point, I would probably expect, if I was holding this trade, there's a chance that I could get taken out and price will just fail this demand. Of course, we're just going to say we're holding because, for this example, we're not even at the chart at this time, so we wouldn't even know what's happening because we're not on the screen. Anyways, this high that pushes price lower into this POI gets taken out with aggression. So now we see that this 15-minute POI, which is the body of this sell candle before this rally to the upside, basically gives us what? A bullish change of character. So now we've gone from bullish to bearish to bullish. So now what are we expecting? 15-minute bullish change of character. We've swept some liquidity here, some relatively equal lows into this 15-minute demand. We're respecting it. We have bullish intentions. Let's see if we can take price and take out what? We likely will take out this 15-minute POI, and we should see price come into the 4-hour. Finally, right? Let's see what happens. This would be the second day of the week that we would now be trading. And so price then comes into what? Now this is where we enter London session. So this is now London session from here to here, right around here. And then we have New York session here. So what do we have? Upon London session, around midnight, my time zone, which is about, I don't know GMT. I think it's 8 a.m. GMT. You can see very aggressive push to the upside that taps into this 15-minute supply. So therefore, we've taken profit on this trade initially from the previous day. Hit take profit. This one here is already somewhat hit take profit, or it would have been taken out if we were expecting price to come lower, if we use that as a hedge, right? Price taps this POI, and what do we have? Would we have set a limit on this 15-minute POI? I would not have necessarily set that, because that probably would have been really aggressive, considering that I could see price come up higher, right? Remember, we have multiple 4-hour POIs. Now, at the same time, in this case, let's say we did take that. This would make sense because it's buy to sell engulfing wicks, and if we're okay with a 5-pip stop loss, we are willing to take that aggressive trade for a 1% trade, for a 1% risk per trade, we could take it. And considering how aggressive this move to the upside was, and if it's respecting this POI, then what does that mean? Likely all of this action that we saw here that created the initial push to the upside, this is the swing. Likely that means that what? That means that the swing low of that move is weak. And so let's say we take an entry off of this 15-minute POI. It's 5 pips, right? And what do we see? Price pushes down. We have an aggressive reaction to that POI with this engulfing candle here. Price pauses, creates some sort of range. Within here, still, this is now what? This is now outside of London session. So we got this entry from London because it was at midnight. So that was a nice entry. Price comes down, creates a sweep of this POI. And then what do we have? This is buy to sell engulfing, which looks just like this one, right? During New York, buy to sell engulfing to the downside, right? Buy to sell engulfing to the downside. We create break of structure here of this internal structure. And so now what can we expect? Maybe we'll get a mitigation of this one. This one swept liquidity and broke to the downside. In this case, on the 15-minute, I'm taking a 50% entry, just as I did previously, because this is a liquidity POI. So to me, that makes sense. So I set entry here. This is the buy to sell that broke structure. If this one holds up here, then that means we're targeting the low. This was the low down here. And so this one could just be a continuation trade, a scaling in during New York. So I would set that limit. New York mitigated the buy to sell that broke structure. And the immediate reaction is what? We take out the low that pushed price back into the supply. So here we took that level out, and therefore this trade we're in. Now, would we have scaled in a second time? Let's just say we didn't, because we already have 2 entries here from that day. We don't necessarily need to do that. That might be aggressive, and not a lot of people would have actually scaled into that. So we're just going to say we took 1 entry there. Now price is now melting to the downside, and what do we have? As price is pushing down. Initially, this was the swing low of that swing high. The swing high respected a refined 15-minute within a 4-hour supply, and therefore this one should get taken out, and likely we could come back lower to the 4-hour POI, the 4-hour demand, and tap it again, maybe, right? but a conservative and smart target would always be the low of the reaction. Price comes down, taps, takes profit. We hit two trades, 16.19 R during London, 13.9 R during New York on the 15-minute. And now what are we in? Now we're in later in that session. So now we have later New York. Now we have later what do we have later? We have Asian session, right? And now as we prepare for the next trading session, during this time we're no longer at the charts. What do we see? So now what do we have here? Price, we have this POI here, we have this sell. This is basically a stacking of sell orders that looks like a shooting star. And then we push price lower to the downside. At this point, we already had a 15-minute change of character here. So price was bearish. We swept this liquidity, so that's when we took profit from our trades. The sweep tells us what? It's a sweep, but no break and close. That tells us what? The weak. It's the initial swing to the downside is weak, and that means that this high is going to be taken out because the swing to the downside is basically not strong enough to break and close and break structure to the downside. So this sweep was just a tap of resting liquidity. Basically, it took all the liquidity we were building from these reactions off of this demand. And so after this happens, what are we waiting for, right? Now, we're not trading until this area, so this data is processing and it's printed already when we come to the chart. So at this moment, when we do our markups, we can see that this supply broke structure to the downside, but swept this 15-minute POI and did not break and close below it. So technically demand is being respected. That means supply is going to be weak. This was a reaction to the 15-minute refined supply inside the 4 hours. So that means likely the 4 hours is going to get taken out, or it's going to get a deeper mitigation, right? So that makes what? Then this area would now be the next target, and that would be the conservative target, right? We could target much higher than that. Here, when price pushes down, what do we have? We have a 15-minute change of character when this low, this area basically swept liquidity and then reversed, pushed down. This is when we take this level, that's when we get our change of character officially, right? Now, you could say that this red zone here, which is in the 50% zone, could be it. We could also say that, you get your change of character from here, right? So either of those POIs could be perfect for marking your change of character. It depends on how aggressive you're trading. And what does that tell us? We have two areas that we could be focusing on. We have this POI and we have this POI that gave us a change of character. This one is a flip as what happened. Price basically, this supply pushes down, breaks to the downside. Price comes back in, taps supply, gives us a reaction that takes some liquidity, mitigates to the left, then pushes in for deeper mitigation, right? And then what do we have? Another reaction, creates another flip, and then we have a doji here. But this doji is the one responsible for violating supply. This one came in for a deeper mitigation to supply, gave us another reaction. But here is where we decided to have commitment. This was the first indecision lower time frame range candle that we're building that later created, this is basically the extreme or the origin of this internal swing that created this change of character on the 15-minute, this breakout of supply. So that wick basically caused the break and close, and we took it out. So we have one POI, two POIs, right? Now what do we have? To get a true break of structure and not just a change of character, we need candle body closure. Technically, we have to breach this wick here with a candle body closure. Price comes down upon, violating this supply. We come back in, we mitigate this entire candle. We have a very aggressive stacking of buy orders building up in this candle here that later gives us what? A break of structure to the upside on this 15-minute POI. And then what do we have? Price is basically hovering in this area, pushes up. We have a bullish engulfing to the upside. We have a 15-minute high. Price comes back to this POI, mitigates it, and then what do we have? Pushes another 15-minute new high, pulls back. This is the low of that reaction. Price then gives us what? Break to the upside again. We have candle body closures here. That's aggressive, but this one's more confirmed. So we form this high. And now the question is, well, what's our POI? Well, we could potentially look at better price POIs. For example, well, this swing to the upside created a break of structure. If we take this low to this high, and I'm going to have to change the color so it's a little bit more clean here. Let's do pink, and let's do like 3 times. We're going to go like this. Technically, we have imbalance here. This one did not really fill that imbalance. Top like the top of the range. It's not really well priced. This isn't a deep enough mitigation for me to be satisfied with. So when London comes around, I can expect what? I can expect a couple things to happen. I can expect price to come down to tap this POI, the flip, or the flip that created a change of character, or this one that we've already tapped once, gave us a bullish engulfing to the upside, came back for 50% mitigation that created a new 15-minute range. I could take one of these zones right here, but the thing is, this already gave us one 15-minute high, a second 15-minute high, a third 15-minute high. It's unlikely that we're going to take out this range considering that we already had enough buys from here. So if buyers are in control of the market, there's no incentive for them to take out their own orders. And so the way that I'm seeing this is this POI has already had a couple taps to it. We could get a deeper mitigation. We could get a same tap of this of the same zone. But what we do have here is we have structural inducement. And so considering that this area here breaks structure to the upside, this structural inducement because it created a structural high. And therefore this liquidity could be enough to satisfy the move. And so considering that this POI is still valid, I could take this entry considering that we really wouldn't be taking out orders. We'd simply be tapping resting orders inside this POI versus these would require to break and change character. Because if we took out these 15-minute, let's say these 15-minute structures, we get a pretty big change of character. Technically, this would give us a change of character as this 15-minute low that made this 15-minute high gets taken. But in this case, that could be what some people call like a fake. It's kind of like a fake out, you know, because what we're doing is we're using this as structural inducement. And so we could set an entry here at the 50% of this range just because we expect price to come back into here. And so what do we have? This is during London session. We can set a limit off of here. Price comes down, takes out this structural inducement, taps, and then rallies. Now, what's our target? If we look to the left, this that swept liquidity to the downside shows weakness, and so we're targeting this high. This would be the very conservative trade. Now, we could target much higher than that, but the proper exit for this trade would probably be this one, because we don't know if we're just going to get a sweep of this high and then a reversal, or what exactly is going to happen. Now, during London session, this sell to buy engulfing gives us what? A huge imbalance left behind. So we could think, okay, maybe price can come back to this POI later. We don't exactly know what's going to happen for sure. So, but we see some aggression. And what do we have? We break structure to the upside. We get a new 15-minute high. Price pulls back here. This is when we get that break to the upside. And now what do we have? Same as we saw on the previous 2 days. What do we have? Buy to sell engulfing that breaks structure. In this case, we also have another buy to sell engulfing that breaks structure on the 15-minute. Here, what do we have? We have a sell to buy that's engulfing that breaks structure. So when New York comes around, what do we also have here? We've made this high. We've pulled back. This area creates a new high, 15 minutes. So we now have 1, 2, 3 new 15-minute highs here. Technically, what we could say is, well, this could hold and we could make a new high. But considering that we have a lot of imbalance still left behind here, we could take an entry off of this 15-minute POI. Technically, we have the sell to buy wicks that got engulfed, and we could use those as we broke out of the range. In this case, this entire candle body would be the higher quality POI. You would see that these wicks would have been taken out if we would have used those. That would have been pretty aggressive. But you know, using this entire candle before it gets engulfed, this is the last candle that gets engulfed, we could use that. Now, the other thing you could say is, well, if you wanted to use the whole sell candle, you could have done that too. This sell candle to the left, this would have just basically been a lower time frame range that was basically an inside bar, and then we got engulfed, right? And so whichever one you would have selected, we could have used that. We would have taken a trade off of the 50% mitigation of it on this POI as we're on the 15-minute. This would have served as structural inducement just as this trade did during the London session. Same exact thing, created a new 15-minute high. This one created a new 15-minute high. We'll use it as structural inducement. This is where we had the sell to buy engulfing, and therefore this could make a pretty good entry. New York for 3 days in a row has given us the same style entry. We tap, push to the upside. What are we targeting? At this point, this London entry already basically hit take profit. But what do we also have? If we look to the left, this is on the 15-minute, gives us a break and close above these wicks. And so to me, that's showing very strong intention to go further up higher, and likely we can target above this 4-hour POI. Now, to be conservative, what would we target? We would target the high of the reaction. So this area here pushed low, tapped into this demand. Basically, the expectation is at the minimum, this should get taken out. Because if this is going to hold, this should get taken out. Now, if we were being more aggressive and we were targeting up here, you would see that if we look to the right, we would have been taken out of that trade. And so in that case, that would not work. Now, as we are saying, we are trying to be conservative with our trades. And so this would be a very conservative, high probability target. So here we would have a 4-pip stop loss, 9.78R, just below 10R. And this trade would have been perfect during New York, as this fits right during that time. What do we have? Price comes up, leaves behind a massive wick up here, which basically is showing us some sort of respect of this 4-hour. And once we basically trade away from this zone, what do we have? This low, this 15-minute low, created a 15-minute high. This target is now a 15-minute high, just as this one was. So we could just label that, add that there, right? And then what do we have? Price comes back, taps into this demand for a secondary time. We give a reaction. This reaction is weak, mitigates this candle here, and shows that we're pushing back down lower. We pause, give us another mitigation of this area to the left, and then we engulf to the downside. On this 15-minute, now we have what? This is our 6th change of character. This is a 15-minute bearish change of character. Now, what do we come back to tap? Well, if we look down here, look at this POIs. These were still unmitigated, and while this trade, during London, we could get a trade off of here. During New York, we got a trade off of here. A lot of times we think just because an area is left unmitigated that we are going to come down and break multiple levels just to tap it. It doesn't always happen. So sometimes your best bet is looking for the most recent 15-minute structure. When New York opened, the 15-minute structure was this one. This was a sell to buy engulfing, broke structure to the upside, right? During the hours in between London and New York, we have another break of structure to the upside. So technically this is a swing, right? This is the previous 15-minute swing when New York is opening. And so when that happens, New York is going to search for better pricing. And so for them, anybody that bought here, likely for them it makes more sense to take them out. Here we have another unmitigated POI, and this one has more imbalance left behind compared to this one, right? This one did more than this move did, and therefore we can use this as inducement. This one this one has inducement because of this. This 15-minute leg doesn't have any inducement, and therefore this one has to be liquidated. Same as here. This break of structure to the upside when London opened, we don't really have inducement for this POI, not very clean inducement, and therefore structural inducement from this one in itself would better support the POI, which is here to the left. Even though we've tapped it a couple times, we can still keep tapping that POI, just building more orders, right? Especially because this one created what? One 15-minute high, a second 15-minute high. This 15-minute high is just going to be liquidated, right? So same thing. But price is going to come back to these POIs sooner or later, right? So what do we see? These POIs are still marked out. Price comes down with aggression, taps this, and takes off. This is during the off session, so we are not trading that. We did not get that entry. We are obviously not going to set limits on that when we're already all the way up here trading these POIs. Now, this, what it tells us is we have a respect of this 15-minute demand, and it shows that price is going to likely remain bullish. as this push to the upside was very aggressive and gave us what? Another change of character, our seventh change of character. This is a 15-minute bullish change of character. And therefore 15-minute demand here is in control, and we've now violated 4-hour supply, and we've taken out 15-minute supplies. And so now the 15-minute, this is one massive swing to the upside. Now what do we have? We have a very strong 4-hour zone here, right? When we refine this, this is a 4-hour POI. We respected the 15-minute refined zone in here. We've changed character bullish again, and we've closed on the 15-minute outside the 4-hour POI. So likely, what do we have? Well, we have a higher 4-hour POI, which is this lighter red, and then a refined 15-minute POI inside the 4-hour, right? And so now what do we have? New 15-minute structure. We pull back down. This is the low of that reaction. Break structure to the upside, right? So this is one swing. And price is basically what? Building manufactured liquidity here. We're building a lot of liquidity. And right when London opens, which is, you can see the gray zone here. This is London. That second one is New York. What do we have? Well, we have a couple POIs that we could look for. Technically, this is the range that we want to wait to break out of, right? And so here we can see that we basically swept some lows. And when we have the breakout from here, we basically have this sell to buy engulfing that breaks this high. And so what do we have here? We have price come up above, take this level out, and continue bullish. As we already know, we're bullish here. And when this happens, when this breaks structure to the upside, any POIs here that we would have been expecting to mitigate don't necessarily need to be mitigated anymore. They can in the future, but we can't have that expectation that, you know, we're going to come back all the way down here to the extreme and wait forever to get price to come here. Because what happened? This created a new 15-minute high. And therefore, there was enough liquidity, there's enough momentum and orders here to make a new structural high. And so it's unlikely that we are going to take out this level because we don't need to. This one was enough to create a new high. And if we did this, it'd be counterproductive to that bullish intentions that we're looking for. We would not need to mitigate these until supply has been tapped and we need to take liquidity, because then we would end up probably taking all of this as liquidity, right? And so we're trading these 15-minute market structure. Now, how could we trade this? We could take this entire POI, this buy candle that gets engulfed, right, inside of this range, or we could be very aggressive and set these wicks. An entry at the sell to buy engulfing wicks broke structure, we could set that. We have a lot of inducement in here. We're building liquidity, as what we're doing here is, this is what it looks like, right? And this is like one of the entry models. Price, we get sell to buy engulfing, and then what are we doing? We're basically building manufactured liquidity on the way down. We tap and we should take off. That's what happens here. Now, this is very aggressive. This is a 2.2 pip stop loss. I don't think 90% of people would take that. So, you know, although this would be a 27.5 hour trade, unrealistic. So we're going to just mark down to that POI here. Now, if we had a 50% entry on this, we would not get tapped. So 15-minute entry, unfortunately, you would not get tapped. If you had it at the open, it would make sense, right? Now, these wicks make sense, you know, but in previous options or previous examples, sometimes we'll take it lower, sometimes we'll take it here. If we set it at the open, this is what our trade would look like. 5 pip stop loss, which is perfect for a 15-minute POI. What would we be doing? Well, conservative target that makes sense would be we would target this 15-minute high, because where market structure is bullish and we'd expect this. Now, we haven't balanced to the downside, but at the same time, we're magnetized to this 4-hour POI. And so this would be a 6-hour trade, which is perfectly valid, makes sense for the 15-minute. Totally makes sense. I would have wanted to take something like that. But at the same time, knowing that we are so close to the 4-hour POI, this would have been your secondary, let's say, target. If you took partials here, you know, that would have been great. You would be safe in that trade. Or you could be more aggressive, target the 4-hour, or considering that our 15-minute zone inside of this 4-hour looks like this. This is the wick. This is a lot of, we have a liquidity POI, so we swept liquidity to the left. stacked enough sell orders to engulf to the downside. And so we could also say likely we could get it, we could target what, a mitigation of the 15-minute or to the 50% of that 15-minute. Either of those would have worked. Obviously price is bullish, so realistically this would be a pretty clean target. I would have set something like this, and 12R is perfect for me, as I prefer not to take trades that are less than 10R. Obviously in these examples I trade lower than 15 minutes, but here we are giving 15-minute ones. So this one, valid, hits 15-minute POI, 15-minute demand. We basically tapped a 4-hour refined 15-minute demand that basically broke this previous 4-hour supply. So therefore, we are likely waiting to target this 4-hour refined 15-minute supply. That one works. This one's during London session. You can see that price comes back down, but still doesn't come back to tap our entry. So if you had a break even, you would still be in your trade. You'd be fine. This one hits 12.4R. Now we have a lot of noise in between this session. When New York opens, we look to the left, and what do we see? Well, we can see that we had this 15-minute high. We pushed here, and we created a sweep of liquidity. So this low created this high. So technically, we could say that we have a change of character here. And so we could consider this another change of character that's bearish. At the same time, what do we have? As an immediate reaction to this, price pushes back up and pauses in this zone. And so what we're looking for is basically before we're able to trade, which technically our New York session does not open until here. So anything after this is when we would be able to take our trade. So we see a sweep. The sweep can be a liquidity POI. So technically what we could see is maybe even that this gets, tapped to the 50%, right? But as we can see what's happening just before the market opens for us in New York, we have this push to the upside, candle body closure above this POI. And so here we have a sell. It's a buy to sell engulfing to the downside that what? Sweeps liquidity. This sweep tapped resting liquidity to the left in this POI, right? We would not have been able to capture this POI as this was during in between of not the prime London and not inside prime New York. So this one would not have been for us. But this bullish break of internal structure here shows us a lot of confidence that likely the sweep tapped what it needed to. And so what do we have? We could wait for a mitigation of this, but what really caused the first engulfing inside this area would be here. Here we have this what? Sell to buy engulfing wicks, and that's very valid to me. This one would make sense. I would not want to see price come lower than that. It could do something like this, but unlikely to do so, as this is where we had the momentum and volume enter the market for this engulfing nature of this trade. This one, when we are targeting buy to sell wicks or sell to buy wicks, usually the entry is going to be at the top. It's just going to tap it. If we have a larger POI and the POI is like maybe too big, then I'll just take a 50% mitigation of it. And so in this case, we're using the wicks, a little bit aggressive, but it works. Price comes in, taps, and because this one broke to the upside here, we're kind of expecting a new 15-minute high. Very conservative trade would be targeting this level here, and that would be a 5.7R trade. Does not really fit my rules. I'd like to see a little bit better than that. And because I have a London entry, I would feel comfortable matching this one and targeting the same 15-minute refined supply inside the 4-hour supply. And considering that we know this is weak, I would very likely expect this to be ran through. So I could even target higher than that. But of course, we're trying to be conservative for this video. Price taps the sell to buy wicks that cause break of supply and that we're engulfing. Price then runs, hits take profit just a few hours after New York. Now here we have the last day of the week, I believe. This was a pretty messy session. I remember trading Friday and I did not get any good trades on Friday, so I didn't really, nothing there. I really didn't see anything that makes sense for being on the 15-minute. Maybe you'll see something different. Anything that I'd be telling you that if I took that was a winner on Friday would totally be like would not make sense. It's just, it would be too aggressive. It just doesn't fit my rules. So little note tip that I just explained a minute ago was when looking for entry at buy to sell wicks or sell to buy wicks engulfing the resultant break of structure, the entry will usually be a tap upon the open of the wicks and not violate the wicks. So that's a little note. So here, this is what my markups would kind of look like. Technically, we have this demand. We could go ahead and mark out this entire zone, but considering how large it is on the 15 minute, I'm okay with these wicks. Here's when we push to the upside. So this is the 15 minute low to the high. If this breaks, we get a change of character. Price here sweeps, pushes high. Doesn't really mitigate anything that I would have been interested in watching. Considering that this also engulfs to the downside, but this is where I would really be looking for price to come into. It did not come into that. So price pushes down, taps here. I could maybe see that this could be considered a flip as this demand pushed here, but it didn't really make anything strong, and therefore when this went, the POI I probably would have looked at probably would have been more like this. And you know, that doesn't make sense to me either, as you know, it just doesn't look too clean. Here we have these buy to sell wicks that looks like did get tapped, but I would not have refined it like this because I really would have been looking for price to come higher than that, right? So price comes in, gives us a change of character. Again, this is now a bearish change of character with this wick below this 15-minute wick low that created that high. Price pushes up with aggression. If we saw the respect of this and then the engulfing nature to the downside, likely what I would have expected is a mitigation of this, and I would have wanted to take a trade off of that. Now, we did not get that happening, and therefore price did not mitigate this POI, therefore I got no entry during London. Price is just kind of moving around here. There was no news during this time, nothing that I would have taken. So no entry during London on Friday. This one definitely too aggressive. Price pushes down. What do we have? Some creation of some supplies here. When New York opens, what happens? We open pretty low in this leg. We have all of these POIs that we could come back to mitigate. Price just further pushes lower. Price comes back up here. Technically, you would maybe be looking at this one, but it does not get tapped. So this one again does not get tapped. Not here. Price breaks to the downside. So no entry here. Basically, New York is ending. If you had a limit on this at the end, which obviously this happened after the session, so we would not even been able to capture it, but if you had a limit on that, you would have been taken out on that. So no trades for New York or London on the last day of the week on the 15-minute. But hopefully that example, hopefully you learned a lot from those examples. Now what I could do is show you a couple refined POIs from the 15-minute. So at this point, if your execution time frame is the 4-hour or the 15-minute, you can be done with the video. If you're looking to refine down lower, then likely you have a couple things you could still learn, because we're going to go over a couple of them on the 5-minute. So let's go like this. So what we're going to do is I'm going to show you overall. Here we have an entry on the first day of the week on, let's say, London. We have one on New York. We have one on New York, not London. One on London, one on New York. One on London, one on New York, right? Do we have any on the last day? Of course not. So you could still get entries every day by refining 15-minute to the 4-hour. From refining a 15-minute POI to the 5-minute. So let's go to the 5-minute. Start at the first day of the week. Start fresh here. All right. So everything that we marked out for the 15-minute, the rules still apply. Remember this POI. This was a 15-minute. This would have been aggressive, but this was the range. Now, if you wanted to refine this, it still would have made sense. 1 second. All right, sorry, I had to pause it to take a quick call. All right, so here we are in the 5 minutes. So this was the 15-minute zone. As you can see, a 15-minute zone that we refined. We basically refined our entry simply by taking the 50%, right? Now, if we hide the 15-minute, what do we see? We technically have the first sell to buy engulfing. Now what we do have is, this is technically the extreme of this swing here on this 5-minute time frame. We technically have this swing low to this swing high. This takes out liquidity from relatively equal highs. So we have some liquidity here that we took from these 3 points, right? And so what we do have is we have technically a flip here. This flip does not take liquidity as price engulfs to the upside, taps this supply, right? Shows us some sort of reaction but doesn't take liquidity. We have the imbalance down here on the 5-minute, and then here we have our push to the upside. So on the 5-minute, we have a little bit more time to react. This POI swept liquidity to the left, right? And then engulfed to the upside. And so this area here, we could have refined a stop loss from the 15-minute that was, how big is the first one? Let's go like this. I might have to activate the 5-minute and the 15. Okay, so the first POI, which if we took the 15-minute would be about 4.7, let's just say 5 pips. It would be a 21R trade. Simply by refining to the 5-minute, how do I hide this? Hide. This would be our new entry on the 5-minute, right? And so what do we have? The notes were from the 15, so this would be just the 15-minute zone refined to the 5-minute. Now, do we have a 1-minute entry on here? We do. Let me show you the 1 minute on the next time frame, but first let's go through 5-minute POIs. So here, this would be the 5-minute that basically was sell to buy engulfing. This flip took no liquidity. The imbalance is lower down here, so this one would have been a perfect entry at 2 pips, which would have been much lower of a stop loss. Of course, now think about it like this. 15-minute time zone, refined to the 5-minute extreme, the origin that swept liquidity to the left and gave change of character to the upside, right? This is all coming from the 4-hour zone. Now, could we wait for an entry here? Same thing? Yes, we could wait for this. This one would have never come. This is a new 15-minute range, and if you see we have relatively equal highs here, we swept the lows and then we took out the highs. So this area here has a lot of confluences for us when we can see it on the lower time frame versus the 15-minute taking it from the 50%, right? So because this is coming from a 4-hour zone, we would still be targeting the 4-hour zone, right? Now, this is what the 4-hour zone target would have looked like. It would have been a 43R trade. Now, had we modified and said, well, that 15-minute POI up here is still valid, we could target that. It could be a little bit aggressive considering we have more POIs to the left. But if we would have, let's say, modified our target to something in here, we're adding from 43 to 52, almost 53. So we're adding about 10R to this trade using that POI. Now here's another example. So here we have this 15-minute POI. Remember, this is on the New York session. We have what? Buy to sell engulfing to the downside. If we look at the 5-minute, look at what we have here. We could refine this entire 15-minute POI to this. Here we have what? If we look to the left, this one took liquidity, right? What do we have is we have these buy to sell engulfing wicks, right? So you could even refine to this like this, just a little bit more, right? But we could also just end up taking this entire candle here, considering that this mitigated the initial candle here, but this left behind this unmitigated zone. And so we could say that we're trading the wicks here, right? And the wicks in this case would be from down here, buying to sell, stacking wicks that engulf to the downside. And here you can see that the low of this candle body closure engulfs several of these candles that push price up. So this is confirmation that this is engulfing. This is the POI I would be focusing on. So instead of having a 15-minute that has a, let's say, 4.8 pip stop loss, that's 5R, we could say that we're going to take this entry from the 5-minute that is 3.6 pips, or even we could narrow it down a little bit more just to that high, 3.3. And what would we be targeting? To be conservative, same thing, this would be our target. Now, when we see these POIs here to the left, on the 15-minute, what does it look like? This is what that looks like. But inside this 15-minute, what do we have? This wick, this is a sell to buy price action that we could be focusing on. So we could refine that 15-minute POI to this sell to buy price action. Now, this one would heavily depend on your spread, but depending on everyone's broker, it's going to be slightly different. Look at how clean this trade is. So we could easily turn a trade that was a 5R trade to a 8.58R trade on the 5-minute. And so in nearly all the cases of this last week, what do we learn? So far, we're not there yet, but in the first part of going over the 5-minute refined entries, we know that almost every single day, the 15-minute could have been refined to the 5-minute and still work out. That's important. That's very important to know. Let's go to the next day. Now, not in all cases, but in most cases, right? Let's look at the 15-minute. Here's the 15-minute. So first entry would have been up here. Do we have anything on the 5-minute that we could have refined? When I looked at this, it wasn't very clean to me. So personally, I would have not taken the trade off of this on the 5-minute. Now, once again, let's just say we set the limit. You would have had the same one as the 15. In my opinion, I'm not focusing on that one because I probably would not have captured it. Now, would I have taken a modified version of this? Probably, but this was not in my time zone that I'm trading. I'm only trading the 3 hours of London, 3 hours of New York. So that didn't fit my rules. Now, we do have for New York session an entry. This is what the 15-minute entry looked like. We took an entry at the 50% of this POI of the 15-minute. On the 5-minute, we can see a little bit more. Now, remember, this was a buy to sell that broke structure and was engulfing to the downside. If we refine to the 5-minute, what do we have? You can see that POI a little bit more clearly. We could now focus on this unmitigated POI that basically was what? This one took liquidity to the left, paused, and then there was a buy to sell engulfing to the downside. This candle was engulfed by this sell, right, price action. And on the 15-minute, we can very clearly see that this is where we committed to pushing price lower. We took liquidity, so it's some sort of liquidity POI in a way, right? And then we broke to the downside. We took all the liquidity that we were building up in here, right? So there's some liquidity there. We pushed to the downside. This could be our refined entry. Now on the 5-minute, we would set our target to the entry, considering how low this is and that the imbalance is it's very small in here. It's just within this area. We just slightly covered and tapped past that imbalance into the POI. And so this POI that would have been given us a stop loss that originally was 5 pips stop loss, 13.4R or 13R, whatever, gives us a 3.8 pip stop loss. That gives us what? Same target. We would be targeting minimum the chalk, the change of character. If that does go through, what are we targeting? The 15-minute low, because that's our original target. So this entry should have given us this push to the downside. Here's where we swept it. This would be a 19R trade with a 3.8 pip stop loss. So another 15-minute entry could have been refined to the 5-minute. This is another one. So let's look at the 15-minute. This is the next day. This is what the 15-minute looks like on markups look like on the 5-minute. Remember, we have multiple POIs. We have this one, right, engulfing to the upside. We have a 5-minute high, new high. We pull back. This is creating the flip, right? Here we have buy to sell engulfing price action that we've tapped into. Forms an extreme, takes out the initial reaction, and gives us what? Change of character to the upside. In this case, we have our break of structure up here on the 5-minute. But what do we have? We have all of these potential entries. Now here we have sell to buy. This is what looked like the wick on the 15-minute. That was the wick. We push to the upside. We come back. We mitigate the top of this. But this POI still is not mitigated to the 50%. So we could see another deeper mitigation. Price creates a new 15-minute high, pulls back. Structural inducement. We take that level and then we push to the upside, make a new point, a new POI, right? Sorry. We make a new structural high. We pull back. This low makes a new high. This one melts when London opens, right? And what are we looking for? Maybe we're looking to come back to mitigate what? 1, 2, 3, or 4 POIs. Here's what our POI, this is what our entry looked like. 3.5 pip stop loss, 17.9R on the 15-minute. If we look at the 5-minute, this is what it looks like. Look at this. This one is the unmitigated 5 minute that basically mitigated this POI to the left. And so what we can see is, even if, I don't know, let's see, did this one come into the 50%? It did. So this one to the 50% mitigated this POI and then gave us a new structural high, right? This one has not been mitigated. In fact, we haven't really tapped into this POI at all. And therefore this could be used as structural inducement. And so we could set a limit on this one, considering we made one high, two highs, and in premium territory from this swing, we have not tapped into any POIs. This one tapped below the 50%, but this is no man's land. There's nothing in here. POIs would be this one, and this one has what? This one is inducement as well for the POI just below. So we have a lot of inducement for this POI, and therefore we could set an entry here. Stop loss is relatively the same. Same target. What would be targeting? We would be targeting this 15-minute high that basically showed some weakness as it swept but did not break structure to the downside, so we're targeting that level. The 15-minute would have given us 17.9R, 5 minutes 17.4R, so actually it's relatively the same, you know, hardly any difference, but the 5-minute gave us the true POI that we actually came in to give that reaction to. Now let's look at the New York entry for that day. This is the 15-minute markup once again for the on the 5-minute time frame. Here we push to the upside, 15-minute high, we pull back. 15-minute high, New York opens here. We have multiple areas that we could come into. We could see price come into this area here, but if we look lower, we have a lot of imbalance here, and therefore price could come lower in for a deeper mitigation. We have this POI right here. This is sell to buy engulfing. But at the same time, what could we be focusing on? The extremes, right? Where do we have imbalance? If we remove the 15-minute, we have an imbalance of wicks right in here. There's nothing in there. Very small area. But that area was where we have an imbalance. So likely we could come down to mitigate deeper than that. This area could work. But considering that the extreme is where we have the origin of this move to the upside, and we do have an engulfing within here, you can see we have sell to buy wicks that are engulfing to the upside. We engulf this little internal range here. We wick up above here. Technically, we have a change of character on the lower time frame here, right? So this origin creates a little internal change of character, as this is where we have what? Buy to sell that creates an internal low. We come in on the 15-minute. Our entry would have been, what would our entry would have been? 4.1 pip stop loss at the equilibrium, the 50% of the 15-minute POI, 9.7R, targeting the high of the 15-minute. What does the 5-minute entry look like? Relatively the same. In this case, maybe someone would have set limits on this one. This one would have been better. Here we have the extreme that we got a reaction from, 11.97R, 3.4 pip stop loss, slightly better run, almost 12R versus almost 10R, not a big difference. In this case, the 15-minute probably would have been a little bit easier for someone to spot, considering that it was taking a trade at the EQ, and it could have been a little bit more confusing to refine to the 15-minute, but we do have imbalance here in this area here, right, between the wicks that we have yet to satisfy. So if we did take out this level, that would have been it, and we did have structural inducement here that we took during New York. Now what do we have? Let's go look to the next day's price action. This was London. Do we have a refined 5-minute? Yes. Okay, so on this one, we would have been pretty aggressive on this one. On the 15-minute, this is what it looks like. Now let's go to the 5-minute time frame. This is what the 5-minute time frame looks like. 15-minute entry would have been at the top because we were using the sell to buy engulfing wicks. Here we have a 5 pip stop loss, 4.9. ran 12R, targeting what? 15-minute supply, as we were coming from what? A 15-minute refined demand inside a 4-hour supply. You can see, so we're targeting 4-hour, sorry, we're coming from a 4-hour refined 15-minute demand. We're targeting 15-minute refined 4-hour supply, right? So here we're looking at this on the 5-minute. What do we see? That in here we have a little inside bar. We have a range developing here. This is basically where we're building liquidity and momentum to take orders to the higher. This is where we get that change of character. We're taking the high. Well, we got a change of character here. What do we have here? This low pushes to the downside. Yeah, so this is basically showing some strength here. We push up. We have a wick above this area. This area is where we have what? Sweep. We cause the sweep. We take out the sweep with candle body closure. Here we have a range developing. We push to the upside. On the 15-minute, this was sell to buy engulfing wicks. So we wanted to refine to see if we had a clear POI. We could have had both of these. We could have been looking for this, which honestly would not have been as clean, considering this is what caused the break out from this high. This one broke structure, so this one didn't break structure, so it's not really as relevant. We could have even looked maybe a little bit lower. Lower price did not come into this POI. So this one would have been better as a refine from the 15-minute. The stop loss, instead of being 5 pips, we could have refined it down to the 5-minute, would have been 2 pip stop loss, just covering that low. Because these are sell to buy wicks that we're targeting, usually the open is respected, and we usually never violate the wicks. We don't usually come even to the 50% of it. So in that case, this one would have been perfect. A little bit aggressive without refining down to the 1-minute for entries, but still works. Targeting the 15-minute supply just above. Turning a trade that was, once again, I don't know if I'm repeating this, I apologize, 12.4R to 30.5R. That's beautiful. Now during New York session, what do we have? We have this POI. Now if we remember what it looks like on the 15-minute, let's look at it on the 15-minute. It's this day here. So many markups on here. This is the 15-minute. All right, so technically this is where we are building that range. This is where we have the sell to buy engulfing to the upside, these wicks that basically broke this supply and an engulfing nature. So during New York, we would expect what? A mitigation of strong demand that broke strong supply. We're going to take that out. So then what are we looking for? On that, we drop down to the 5-minute to refine a 15-minute zone. You can see that we have a pretty big range here. We could focus on the sell candle that got engulfed. So, excuse me. So we're going to refine that. This is what that 5-minute zone looks like. We can cut down a POI that is 4.6 pips, which is not bad. At how much R? 9.2 R. We could cut it down just a little bit more by half a pip, 4.1 pips. This one gets tapped on the open. Now remember, this is a wick entry. It was a sell to buy engulfing wicks. So we tap the open depending on spread if you would have gone triggered, but it still taps the POI, so it's valid. 4.1 pip stop loss. We target the same 15-minute zone, 15-minute refined supply in the 4-hour. And this trade ends up running 10.46 R. That's beautiful. We get to Friday. On Friday, what do we see here? Friday, I don't think we had any entries on the 5-minute. Nope, no entries on the 5-minute on Friday either that I saw worth taking. So nothing that I was very confident about, right? So hopefully that helps. Now, if you want to stick around and see the last part of this, which is 1 minute, I'm just going to go over like 1 or 2 because this video is already super long. Here's a couple. Jesus, there's a lot of them. Let's go over some of these here. Hopefully this really helps you guys. So any markups I'm doing in pink basically on this because I really wanted to let it stick out so it's not going to blend in too much. So I think we're going to refine most of the POIs that we got 5-minute entries on to the 1 minute, just to kind of get some idea for some price action, what we were thinking. This was a 15-minute refined zone. The 5-minute didn't look very clean. That would have been a very aggressive risk entry. On the 15-minute, it would have been fine, but on the lower time frame, a risk entry from that zone probably would not have been ideal. Here, basically, this is the only unmitigated portion of this range. As this doji came in, swept liquidity, and pushed to the downside. This area is still unmitigated. We would not really have looked for an entry off of that. Now, that's from the previous week, but that's just us refining a POI from the 15-minute to the 5-minute to the 1-minute. So let's look at these areas here. We're going to refine 5-minute to 1 minutes. Okay. So this was a 15-minute zone, right? 15-minute zone that we refined to the 5-minute. That's the 5-minute. That we've looked at 1-minute potential areas for entry. So this is what we could have done. This would have been a little bit aggressive, but that's how trading the 1-minute is. So this area here, we could have marked up multiple POIs. Let's first add this color in. Okay. So we could have marked up a couple things here. Now we did take liquidity up here as we already explained, right? So we take the low, so we created a sweep of the lows, and then we break to the upside, showing some strength. So take the lows, take the highs. We want to mitigate the lows, right? We want to mitigate this area. We have multiple areas that we could consider zones in here. Price comes in to tap these wicks. Now, would we have marked out these wicks? Not necessarily just marking them out. We would have been waiting for this POI. When we see this tap, we see what it tapped into to the left. We see that it's these sell to buy wicks that are engulfing that ended up breaching this 1-minute supply. This shows us some sort of respect of a demand, and we get what? A change of character on this 1-minute time frame. Here, basically, we see prices building liquidity to the downside. This supply pushes price into this POI, right? That we would have been waiting for this one, but this one gives us what? Change of character to the upside. And therefore, we could have done what? We could have said, unlikely we take this one. Likely we get a mitigation of this. This one leaves behind a lot of imbalance and gives us a change of character to the upside. So we would take an entry off of here. So what do? We can take an entry off of the open, or considering that we have a pretty big wick, I would have probably set it at the 25%. I like taking 2 pip stop losses on 1-minute entries. This is what my 1-minute entry would have looked like. This gave us change of character. We have a liquidation, mitigation, aggressive reaction, change of character. Price comes back in to mitigate the area that was engulfing to the upside, sell to buy engulfing price action. We come in to mitigate. This would have been my entry on the 1-minute of a 15-minute refined POI that on the 5-minute looks clean. We also tap the 5-minute range. This is the buy to sell range, and this area is kind of what caused the breakout. So that makes sense just looking at that. It's when we're trading on lower time frames, we're doing more confirmation entries, because sometimes setting risk entries doesn't make sense unless it's a very strong POI, or if it takes liquidity, it has to meet a lot of rules. So for me to take an entry on the 1-minute, it's different than if I take a 15-minute. The 15-minute is a lot more forgiving, and I feel comfortable setting risk entries on 15-minute POIs. But if I see a 1-minute entry, then it has to meet more rules. So this was New York. This was basically a buy to sell engulfing to the downside during New York session. Broke to the downside. We technically see that what? Demand has not been tapped yet, so supply is still in control. We could see price come back in for a mitigation. This was the 5-minute refined POI. What do we see here? We could simply just refine a 15-minute POI that's visible on the 15-minute, very important, that can be cleaned up to the 1-minute. You see this is where we have the imbalance. There's an imbalance in here, right? So we could have taken that, and this makes sense. We could have set it at the open. 2.8 pip stop loss is still fine. We could have also just targeted a little bit higher up. We could have been targeting more towards the candle body. So let's just say if we narrowed down 25% entry, probably that's what it looks like. Cover the high, 2 pip stop loss. So here we get a 16R trade. What are we refining down on the 5-minute? We have this refinement here. We could be focusing on what? Candle body here. This, we could look at that. We could also look at the entire doji candle. which is more likely to be tapped. We could see something like this. That's where our target would have been. This would be kind of aggressive, so we'd set it at the 1 minute here, considering that we have the imbalance right here. So here we have some imbalance. So we could look to come down into this POI that created that imbalance. So that's where we get that mitigation from. So that's 1 minute refinements of. Now remember, if you're thinking like, okay, well, why would we take this on the 1 minute? Remember that these are 15-minute POIs that we refine to the 5 minute, that are visible on the 5 minute, that we refine to the 1 minute. So it's going to be a lot easier to refine a 15-minute visible POI to the 1 minute. Much easier, right? So that's why I'm going through them more casually, right? If we're trading 1 minute POIs, it doesn't make sense unless it's refined from the higher time frame. This was a 1 minute refinement. We would not have taken a trade off of that. Once again, I keep talking about that. If it was the 15 minute, which on the 15 minute, it was buy to sell wicks, way more confident, way more forgiving. I'd take it on the 15 minute, not on the 1 minute. So what I'm looking for here is a tap. We have a respect of that supply. Price comes down. We fail to give a change of character. Price gives us what? Failure to make new highs. So now we're trading between this range, potentially. We have this area here. This could be an internal range until we break out. Price comes in, taps, comes down. We have relatively equal low, some little liquidity we're building here. Price taps the POI again, and we can see a melt off. We melt. We basically what? We wick just below this, barely by anything, but we still wick it. Change of character here. We're slightly bearish. What pushed price into this POI on the 1 minute? Well, we could look at this, right? The extreme, we could say we were looking at something up in here potentially, but this is the last candle that has buy to sell price action that's engulfing. And so this one makes sense. Now we're not just setting a limit off of that. That's pretty aggressive. What do we see? Price taps, pushes to the downside. We'd be expecting this to go. This does not go, so we tap this POI. We're giving another attempt. We take this high, we get a deeper mitigation. That's fine. We don't trust the first high. Price is giving us a reaction to this 1 minute refinement, and you can see that we're basically going to target this liquidity, and we're kind of melting slowly, right? We tap this initial POI, right? In New York session, we could take something off of here, but this isn't very high quality considering we've tapped a 15-minute refined 1 minute POI inside of a 4-hour supply. We've just changed away from that. So we should not be looking for trades to buy. We should be looking for shorts coming out of respecting a supply. And so we want to see what happens here. Price gives us a respect of this 1 minute POI, comes in to tap this. This was the buy to sell engulfing to the downside that created the shift bearish here. Price taps. What are we looking for? Now we're looking for anything where we can take a trade bearish as we're getting some confirmation by respecting. We're creating a supply chain, right? I'd like to see this go. Once this breaks to the downside on the 1 minute, right? Candle body closure where we've basically showed our bearish nature. We now have this swing. This is swing to the downside. We can see this obvious POI that swept liquidity and mitigated the extreme. Therefore, this is our refined POI. Do we have anything on the 5 minute? The 5 minute would have given us this entry. The 1 minute probably would have been a little too aggressive for me. This would have been my entry. 4 pip stop loss would have been way too much. Let's see, what I would look for is tap of the equilibrium. Did we get that? Yes. Tap of the equilibrium. Let's refine this from 4 pip to about 2 pip. 2.1 pips. That one runs. We're coming from a 15-minute refined POI. So we're coming from a 15-minute refined 4-hour supply. And so we're going to target what? This would be the 15-minute low. That's what we target. This would be 33R. That's a really nice trade, right? We're just going through our thoughts, right? So what do we have here? We have 5-minute zone. This was a 5-minute POI. This trade I actually took I think mine ran 17R. Here we have a 1 minute refined zone. Here you can see that we have a lot of range developing in here before we break to the upside. So let's see what we could refine here. We have a sweep here, so we could take this sweep, right? We could take the entire extreme just in case, but we could also take this sweep. This is what has not been mitigated, so this probably would have been the cleanest POI. That one gets tagged. It's respected. We could take that as the entry for the 1 minute. Here we have 2.2 pip stop loss. That's fine. So entry would have been like just right about there. So on this 1 minute zone, and then we could have done this, but considering that that's a 1.4 pip stop loss, we'd be comfortable with the 2 pips. So 2 pip stop loss, right? That's just a refinement of the 5 minute zone. That's the 5 minute entry. That's the 1 minute, right? Then we go to the next day. What do we have? We're simply just refining to the 1 minute. Here's the 5 minute zone, 5 minute POI. We can push the 5 minute to refine to the 1 minute. Here we have a little bit of an imbalance between these wicks here. This is the extreme that gave us basically a change of character. Here you can see that this was the low. We made equal lows here. This is what pushed price into that to make those equal lows. And this POI basically engulfs to the upside of this internal area here. We have a pause, and then we push to the upside. And this is where we're getting our change of character on the lower time frame. And because this is the 5 minute refined POI, we're simply just looking for a more clean 1 minute. This one doesn't really fit our rules as it doesn't take liquidity. Therefore, we would look for the extreme. The extreme has imbalance between it. So we would be willing to set a limit on that. So the 5 minute limit looks like this. This is the 1 minute refinement. We get a tap of the open, 1.4 pip stop loss, that's fine. We could even, give us a little bit more room if we wanted to, and, cover those relatively equal lows down there, give us 2 pip stop loss, and we're fine. 30R, 21R, still relatively good. Runs, what are we targeting? The 15-minute structure to make a new high. On the 1 minute, we could have managed this trade a little bit better, waiting for a 1 minute change of character. What are we looking for? Do we have another trade the next day? And then we have Friday, which doesn't really have any good trades. Do we see anything here? On the 5 minute, do we have any refinements? Or is this was another day? I think this was we still have Friday. So this was basically Thursday. So this was a 5 minute refined zone. We take the 5 minute refined zone, we look at it on the 1 minute time frame. You can see that the POI is pretty much exactly the same, right? So we don't really get a cleaner POI by refining, so we take the same entry pretty much. Maybe we narrow our stop loss by 1/10 of a pip just by covering this low, right? So that one works. It's a refinement of the 5 minute. Do we have anything here? We do not have anything there. Then we go to Friday. And on Friday, I do not believe we have any trades. 1 minute did not provide any trades. I would have taken something if there was. So that's the end of this video. So hopefully you enjoyed this video. Once again, if you'd like to join the Discord, it's free forever. So just join, links in the description. Hopefully this breakdown of last week's price action gave you tons of new ideas on how to take entries. Whether you're trading on the 4 hour, the 15 minute, you're refining 15 minute to 5 minute, or you're refining 5 minute to 1 minute, there's going to be trades every single day. So the idea is just to refine and really pay attention what areas broke structure, what areas are strong, do we need to create more liquidation, or did the POI already take liquidity? If it did, then likely this one already is going to hold. You want to make sure that you find your entry criteria on your execution time frame. So this one shows you by specifically addressing how every entry would be on every single time frame. Hopefully you enjoyed it, and I look forward to seeing you in the next video. Peace.